So now the next we will cover is statement of change in equity. If you remember, so far we have studied two statements. We started with a statement of profit or loss, then a statement of financial position, and now we will look at a statement of change in equity. And this is the template for statement of change in equity. As I mentioned, templates are not given for you in the exam, so you need to memorize them and know them by heart. Can you see? These, when you have X in the box, can you see the X in the box? This means that this is where you're gonna write your figure. Any box without X, you don't write it at all. Just leave them. Okay? Any box or square without X, you don't touch it, please. Yeah? Great. So this is that template. We'll look at it now. We'll go in details and we will do it. Have a look. First, share capital. Let's have a look and see what do I mean. So now when you talk about businesses, there is two types of businesses here. Of course, there are more than, but the main, the limited company and private limited and public limited. Yeah, the private limited, they may not issue shares to the public. Yes, they have shares, but they don't issue to public. Yeah, they do not issue to public. It's the issue to the if they have friends or family on their own. It's a private limited. Okay. Of course, as a private limited, you can access the details of the company and the financial statements using the company's house. So if you go to Google, just type the name of the business, company's house, so it does give you all the details of the business. So the company which issues shares to the public, and everybody can buy these shares, including you, including me, is public limited company. When we talk about public limited company, we talk about Tesco, we talk about Mark and Spencer's, we talk about Barclays. So the huge businesses, they are listed. They are listed means they are part of the stock market. And if you look at London Stock Exchange, so if you go and have a look there, so you will see a lot of companies there. There is a FTSE 100. FTSE 100 means that the largest 100 companies in the UK in terms of revenue. Yeah, so have a look and learn a little bit about the stock market. So now when it comes to stock market and the stock, remember that the share, each company has a share, remember, and the market are called, there are three share values. The first one is the nominal value, and the nominal value doesn't change, it's fixed, the nominal value. Market value is usually the price of the share, how much is in the market right now, is changeable all the time. You can see it right now £5, maybe after next day you will see it £6 or £7 or £3. Yeah, so this is the market value. This is the price which you if you want to buy, this is the price you pay for it. The share premium is the difference between the market value and the nominal value. This is the difference between the market value and the nominal value. It's called share premium. Okay, let's have a look. If we take this example, Emily PLC issues 100,000 shares at £1 each. At £1 each. Okay, so when you say £1 each means it's a nominal value. Yeah, nominal value. The market value is £2.25 per share, right? If we need to calculate the share capital. So when you calculate share capital, so you need to use the nominal value. Right? Which is 100,000 shares times £1 is the share capital. Right? 100,000 pounds. So the share capital is 100,000 pounds based on the nominal value. The market capitalization or the market value would be based on the market value of £2.25. So 100,000 shares times £2.25 equal the market capitalization of £225,000. And at the end, the share premium, we did say the difference between the market value, which is £2.25 minus £1, the nominal value equal £1.25 is the premium value. You need to multiply it by 100,000 shares. And that comes with £125,000. Can you see, if you add up the £125,000, the share premium, plus the £100,000, the share capital, so that equals £225,000, which is the market value or the market capitalization. Okay. Right, here we go. Now when it comes to the statement of change in equity, as you see, if we need to put the numbers here, so in terms of share capital, we calculated is £100,000, we wrote it here, can you see? And share premium is £125,000, and we wrote it here, can you see? So, and the total, as you see, to £225,000. So that's we record when we issue of share capital or we issue shares. Okay, great. Hope so far is fine. Yes, great. Let's move to exercise 3. Apple PLC has issued share capital of £2 million. £2 million. What do I mean by issued? Issued mean it's issued to the public to buy the shares. £2 million made up from shares with a nominal value. So the nominal value is 25 pence. The nominal value is 25 pence, and the market value is 95 pence. So in this case, the share premium would be, or the premium value would be, the 95 pence minus the nominal value, the market value minus nominal value. 95 pence minus 25 pence equal 70 pence. So the question asks you to calculate the market capitalization and also the share premium. Now, you need to ask yourself now, we need the number of shares in order to multiply the nominal value of 25 pence in order to find the share capital. Yeah, and you need to find the market capitalization to multiply by the 95 pence, and the share premium the same, the 70 pence. You need the number of shares, but in the question there is no number of shares. In the question there is no number of shares. What the question does, it tells you here that Apple has issued share capital of 2 million. So Apple doesn't tell you what is the how many shares, but it tells you that we need £2 million. We need £2 million to raise. Yeah. In this case, what you need to do in order to find that the number of shares, what you need to do, you need to divide the £2 million, which is the share capital. This is the share capital, £2 million. You divide it by the nominal value, which is 25 pence. so you find out the number of shares. Right? In this case, can you see? Here we go. So 2 million pound, 2 million pound share capital divided by nominal value, each share 25 pence. Yeah, that's 8 million shares available. 8 million shares available. Yeah. I wish if I can own some of Apple shares. Right. Now, if you look here, so the 8 million shares, if you multiply by 95 pence, which is the market capitalization, so that's 7,600,000 pounds is the market capitalization. So in terms of share premium, if you remember, so the share premium or the premium value is the difference between the market value 95 pence and the nominal value of a 25 pence, which is 70 pence, times 8 million equal 5,600,000 pounds. This is the share premium. Yeah. So the market capitalization is 7,600,000 pounds, is divided into the share capital 2 million and the share premium of 5,600,000 pounds. Good. And if you want to put in the statement, here we go. You put the share capital, which is 2 million, share premium 5,600,000, and the total 7,600,000 pounds. Okay, great. So now, as a business, right, the business has shareholders. I'm talking about usually the PLC, public limited company. Shareholders who buy shares in the business. For instance, if you have some money and you buy shares, if you want to buy some shares in Tesla, yeah, if you want to buy some shares in Tesla, when you buy some shares in Tesla, right, you own the shares, okay? Of course, if you don't use leverage, you own the shares. So once you own the shares, you become a shareholder. And once you become a shareholder, you are entitled to dividends. You are entitled to dividends. What do I mean by dividends? When the business, at the end of financial year, when the business, they calculate the profit or loss, at the end of the financial year, when it comes to profit for the year, after they deduct the tax, so let's say 10 million pound profit for the year. This 10 million pound, okay? The question, what are you gonna do with it as a business? The 10 million pound, okay, they made 10 million pound of profit, right? Great. So what are they gonna do with it, right? So they have two things to do. The board of directors, they will meet and decide that a percentage of it will go to the shareholders, yeah, and the remaining will go to the something called retained earnings or retained profit. Retained earnings or retained profit means this profit, we keep it in the business for future investment. For future investment. So the percentage goes to shareholders, right? So if you own 100 shares in Tesla, this means every year you will have dividends based on this 100 shares. So each share, for instance, if they decide at the end of the year, they will distribute 10 pence per share. 10 pence per share. If you own 100, so 100 multiply 10 pence. That's what you own dividends. Yeah, that's called dividends. Not all of businesses, they distribute dividends. Some they don't. Yeah. This is extra, something extra. Um, and of course, dividends attracts potential investors to go and invest in the business. Okay, so of course you get benefit from buying shares if the market value goes up over time, isn't it? Amazon stock, if you had 5,000 pound in almost 2000, yeah, that's almost 20 years ago. Yeah, if you've got, again, I'm repeating myself, if you bought Amazon shares with amount of 5,000 pound in 2000, so today's the share, the 5,000 pound, almost today's the value would be around 5 million pound. 5 million pound. Yeah, can you see? So it's not always the dividends is the one. Yes, dividends is very important, should be generous dividends, but again, the business also has to be sustainable, and the business needs to be investing in a lot of technologies, and especially nowadays we're talking about 5G and AI and all this stuff. So the technology sector, that's the attractive sector for potential investors. So now the dividends is classified as a liability to the business. Why? Because the business has obligations to pay dividends to shareholders, right? And that's why it's classified as a current liability. We need to include the current liability in statement of financial position, and also you need to include dividends under the statement of change in equity. Yeah, okie dokie, here we go. Retained earnings and dividends. Let's take this example. Okay, here we go. So at 31st of July 2020, BMW PLC has ordinary share capital of £600,000 with a nominal value of 30 pence. Yeah. Again, the question doesn't give you the number of shares. So what you need to do, simply share capital, £600,000, you divide it by the nominal value, which is 30 pence. The directors have declared a dividend of 3 pence per share. So any shareholder owns shares, we will pay them 3 pence per share, which will be paid out after the year end to all shareholders. Net profit or profit after tax is £85,000. £85,000. Retained earnings or retained profit at 1st of August 2019, this is the beginning of the year, yeah? This is beginning of the year, was £15,000. And the question asks you to calculate the retained earnings or retained profit at the end of July 2020. Okay, guys, let's have a look. First of all, the balance brought forward, this is the opening balance. The opening balance for what? The opening balance for the retained earnings, which is the £15,000. The £15,000. If you this £15,000, if you deduct the dividends, if you take away the dividends, £60,000. Why £60,000? As I mentioned, remember what I said? I said you need to calculate the number of shares. Yeah, because the question mentioned the £600,000 share capital, but didn't mention anything about number of shares. So the £600,000 divided by 30 pence, the nominal value, it comes to 2 million shares. So 2 million shares times 3 pence per share, the dividend per share, 3 pence, 0.03, so equal £60,000. Yeah. Then what you need to do, you need to add the profit after tax, the one in the question if you remember, and then you will have the retained profit or retained earnings at the end, or CF carried forward, mean, or CD carried down, and the end is £40,000. £40,000. So this means this is how much left they have. How much left? So they have retained the profit, £40,000 at the end of July, at the end of financial year. They can do whatever they want, reinvest it or keep it till next year. So this is the way how we calculate retained earnings. And if you want to put it in the statement, here we go, put it in the statement. Very simple. Look at the retained earnings column, guys. So again, brought forward, balance brought forward, beginning of the year. Here we go, 15,000. Then dividends minus 60,000, profit for the year 85 plus, and balance CF carried forward 40,000. Can you see? The share capital figures and the share premium, these figures are taken from exercise 3. If you go back to exercise 3, and now if you go do the total, and then you calculate the total change in equity. You can see, so this is kind of the full statement of change in equity. And the good news is, when you calculate or when you prepare a statement of change in equity, what you need to do, simply you just, when you go and prepare after a statement of financial position, because you know under a statement of financial position there is an equity section. There is an equity section. So what you need to do, very simple, but you need to copy paste numbers here. So you just transfer these into the equity section in statement of financial position. Okay, right, here we go. Right, the last thing before we finish the lecture, taxation. Remember, guys, as a business, they pay a corporation tax, and this corporation tax is a way the business pays, including any limited company which is registered in the company's house. Okay, remember this, and remember that when it comes to corporation tax, remember that we need to include it at the end of the at the bottom of statement profit and loss. If you remember, at the end we deduct the tax, but also we need to include the tax payable under the current liability in a statement of financial position. Here we go. Right, any question, guys? Please ask. Yeah, otherwise I hope you enjoyed this lecture. Interesting lecture, I know. Hope you enjoyed it, and hope you start exploring the market. The market is interesting. Stock market is interesting. So enjoy it, and I hope you have a lovely day. So take care, guys. God bless.